Hi, this is Dave Bolduc with the Bella Group. Welcome to my weekly real estate market update. It's the second week of February. We're going to talk about a couple topics that a lot of people ask me about. First one is home price appreciation and arena bubble. And the second one is one we hit every week, which is mortgages. So let's talk about the price appreciation. This is a survey question from Realtor.com. They're asking, is the price appreciation sustainable, or are we going to see a price crash? The survey results are interesting. 77% of consumers said yes, we're in a price bubble. 44% said of agents said the same thing, that we're in a price bubble. I want to present a little bit of data that contradicts that. I don't think we're in a price bubble. I think there are real reasons why we're seeing the price appreciation that we're seeing. Price appreciation in 2021 was 15%. They're predicting on the high end 9.6% this year. That's up from previous estimates that I reported on just a couple weeks ago. You can see in 2021, month by month, we went from about 10% price appreciation in the beginning of the year to over 18% in the second half of the year. So significant price appreciation last year. On this slide, you can see home prices are forecasted in 2022 to go up by as much as 9.6%. There's 7 different groups that made estimates. The average is 6.1%. The last time I made a video on home price appreciation, the average of all the forecasts was about 5%. So the average has gone up. And I expect it to continue to rise as we continue to see price appreciation. This is all a matter of supply and demand. This isn't a bubble. There are real reasons why, and I want to dig into what those are right now. So let's look at a good indicator of supply, which is new listings. They're dropping off dramatically. We do expect to see January and December low listings. That's because of the holidays and winter, and people just don't want to deal with it during those times. That's normal. But these numbers, this is for U.S., are very low at 232,000. Active listings, 483,000. That's just over a month of inventory. In Connecticut, we're at 5,600. That's 1.3 months of inventory. Very low. We like to be around 6. And speaking of that, neutral market's about 6 months of inventory. A seller's market is less than 6 months of inventory. Like I said, we're in that 1.3 month range. When you have a low supply and a high demand, prices are bid up. When you have a high supply and a low demand, prices are bid down. And that's what happened in this example. So these are the inventory levels for homes on the market in the 2007 time range versus today. You can see as much as over 9 months of inventory. That's a buyer's market. You have a lot of supply, very little demand. Prices are getting bid down. That's why the prices crashed. On the other side of the coin, we have today where inventory is continuing to drop. And like I said, in Connecticut today, we're about 1.3 months of inventory. Demand is very high. We have millennials buying. We have Gen Z buying. We have interest rates, even though they are ticking up. I'll talk about that in a minute, but they are still near historic lows. And we have people still pushing out of population centers because they've redefined what a home is. They want to have a little bit more space to do the things they want to do. So these are all real drivers of demand. So we have low supply, high demand. Prices will go up. So going into buyer demand, which I just kind of touched on a little bit, 15-year record high for annual sales, 6.1 million last year. 2022 is forecasted to be around the same numbers. So there's a lot of strong demand. And this is in a market where supply is low. Imagine what we would be doing if we had plenty of supply. Looking at this, the demand that we have out there is highly qualified. If you look at the orange bars to the left, that's the number of mortgages in billions of dollars that were out there with credit scores less than 620. So it's going to be a riskier mortgage. Now, after the crash of 2007, we've seen much more rigorous checking by banks. And so it's much harder to get a mortgage. So the people that are out there with mortgages are less risky, more financially secure. So we are less likely to see a big glut of foreclosures, which was a big part of what drove the inventory back in the 2000s. So wrapping things up, I don't think we're in a price bubble. I covered reasons related to the supply, the very low supply. I covered what is driving the high demand. And I think that with mortgage rates creeping up, we will see some moderating of this, but overall demand will continue to be strong. And until we do something about housing supply, the supply is going to continue to be low. So let's talk about mortgages. Take a look at that. This is the Freddie Mac primary market survey. It's from yesterday. They do it every Thursday, so that's why it's a day old. And you can see we're at 3.69, which is coming on the heels of 3 weeks at 3.55. So we have seen a jump up in the mortgage rate. And looking at this chart, which is over the last year, you can see we have climbed about 1% since last year. Now let's scale that out to a 10-year view. And you can see we're still below the highs that we saw at the end of 2018, which was 5%. And we're still below a good deal of the chart in general. So we're still near historic lows. We have increased, and inflation is still going very strong. And the Fed is talking about bigger and more interest rate increases. So interest rates are going to go up. So with inventory down, price appreciation expected to continue throughout the year and probably beyond, and interest rates going up, now is actually a good time as a buyer to purchase, because you can lock in the lower interest rate and you can buy at that lower price and then capture that price appreciation as it moves forward. So hopefully this was useful for you. If you have any questions or comments, please leave them below. I'll be happy to interact with them. Please click the like button if you got any value, and click subscribe and ring the bell to get notified. I do these every week. My winter buyers and sellers guides are available. Link is in the description. There's no obligation. You can just click the link and get the information. You don't have to provide any contact information. Thank you for joining us, and have a great day.